Carl Gomez, thanks for having a chat today. Carl, I think since we last spoke, it's probably about a year ago. You are, I believe, still senior vice president at QuadReal. Is that still the case?
Yeah, that's correct.
Right on. And prior to that, you were, I believe, it was chief economist at Bentall Kennedy.
Correct. Yeah.
Okay. Well, Carl, again, thanks for having a chat today. We've been talking to a lot of people, obviously, in the commercial real estate space, and we wanted to, have a discussion with somebody more from an economic point of view. So, kind of broadly, generally speaking, I'd like to get, first of all, your take on, what's transpired over the last few weeks and maybe a little bit of the response that we've had from the feds and what you're seeing in kind of from your vantage point.
Yeah, well, obviously it's a very dire situation to be in, a global pandemic. And, we haven't had one for, almost a century and a bit. And, when you look at what's happening right now with social distancing measures, not just in Canada, but across the world, it really has set itself up to be one of the, probably one of the worst downturns since the Great Depression. The immediate impacts of shutting down entire economies, whether it is Canada, whether it is globally, has a meaningful impact on GDP growth. And we're already starting to see those numbers start to come in. If we were to throw a number on it, the Bank of Canada today kind of said that activity in the second quarter was down about 10%. That's a preliminary estimate. But I think the actual impacts are probably going to be, closer to 25% on an annualized basis. So again, this is unprecedented. It wouldn't be unexpected because you're shutting down very big parts of the economy, but certainly these are deep impacts on GDP. We've also seen the impacts on employment. The frontline guys that are working in accommodations, tourism sectors, hospitality, restaurants. Those have been very big impacts. Well over 2 million people losing their jobs in Canada. It's upwards, I think, of about 10 million in the United States. And of course, that's a stressor on the overall economy as well when you see that kind of job losses happening. So certainly very deep economic impacts.
Yeah, for sure. And in terms of you said 25% potentially on an annualized basis. And I mean, the technical recession would be, I think, two quarters of negative growth. Are
Yeah.
we on track for that? I mean, at this point, like you said, it's a recession, but it's not like the great financial crisis. We're actually causing the recession specifically from a policy standpoint.
Yeah, what's interesting is the first quarter, at least in Canada, the Canadian economy was slowing. And the first quarter, before we even started social distancing and the pandemic impacts, we already saw a slight negative growth rate in Canada. So, there's no doubt that we're already headed into a recession. It's from a technical standpoint. But that's just a technical discussion. 2 quarters of negative growth means recessions. But when you have a 25% dip in Q2, that's along with lots of job losses, that's recession. So I think it's fair to say recession is there. The IMF has recently come out and said Canada will probably see a negative 6% growth over 2020. That's again an estimate, but I think there's no doubt that the Canadian economy is in recession. The global economy is in recession. The only question is that a recession, or how deep is that, and how long do we take to recovery?
And in terms of the response from the feds so far, with the rate cuts kind of, anticipating or following suit with the United States, what do you see as the effect of that specifically on the economy, but also kind of commercial and residential real estate, as we have seen that mortgage lenders, just because the overnight rate has decreased, doesn't mean that they haven't kept their rates just due to the risk. So
Yeah.
what's your view on that?
Well, I think one of the things that it's important to keep mindful of is that our benchmark for a lot of this was the 2008 financial crisis, and during that financial crisis, the capital markets fell apart, the lending didn't happen, and so the Bank of Canada, the central banks, they all stepped in with various liquidity measures to prop up the capital markets, and that worked. That helped to get liquidity back into the system. And we started to see cash come about, cash start to come to the people who needed it, particularly borrowers and investors. Today, we have a liquidity crisis in the sense that confidence wasn't there. And the central banks, including the Bank of Canada, have been very, very forthcoming to kind of prop up the capital markets, to the extent that even the Bank of Canada is now engaging in quantitative easing. buying outright assets like corporate bonds and government bonds, something they didn't do in the financial crisis back in 2008. So the response has been swift. It's been very deep. In the U.S., the Federal Reserve is putting trillions of dollars out in buying up assets and expanding their balance sheets. That's going to help. There still is a bit of a liquidity freeze out there right now. I mean, for some deals, mortgage terms are a little bit higher because credit spreads are wider. Access to capital has been a little tougher for some people. So there has been, it hasn't unmelted completely yet, but I think over time there will be this liquidity response. The one difference that I would stress, however, is that, unlike the 2008 downturn, where it was a crisis of Wall Street, this is a crisis of Wall Street and Main Street. Main Street is suffering large economic impacts from this. And so, the credit response, the liquidity response by the central banks, that'll help to some extent. But what you really need is a strong fiscal response from the federal governments. And we are seeing just that. I mean, certainly a lot of the policies that have put in place are helping out distressed businesses, frontline workers, things like that. Those are immediate, helpful sort of things that are going to happen. My concern, at least from an economist standpoint, is that these, while these are immediate helps, long term we are still going to be dealing with, the ramifications of this downturn, and so there will be long term help that the federal government is going to need to continue to provide to get the economy back to a state of normal.
And from that point of view, my understanding is first on the monetary policy with quantitative easing right now, is that the Fed solution to, potential liquidity trap where our rates have been so low for such a long time that is really the only or one of the only tools they have in their tool case? And then secondly, what is the impact of that on a longer term basis? Will you do this indefinitely in regard to inflation?
Well, so that's an interesting question. I mean, what they're really trying to do here is create liquidity across the yield curve. They can drop interest rates on the policy side, and that's definitely helped to keep those rates lower. Going up the spectrum by buying up bonds, which is effectively what they're doing by buying up corporate bonds, by buying up government bonds, mortgage bonds, things like that. That helps to create liquidity because there are other buyers that have stepped out, and so they're using their balance sheet to be able to do that. That effectively stimulates the liquidity in the market. And that was what the Federal Reserve essentially did. Their ability to print money is unlimited, so they can go out there and buy these things to keep the liquidity out there in the market. I think that, there's going to be at some point one day a cleanup that needs to happen where the balance sheet has to be plugged and unwound, and that'll roll down. But certainly the lesson from the financial crisis was, while everybody thought that stimulative monetary policy would create inflation, it didn't actually create inflation in the real economy. It might have inflated hard assets. So think about stocks, some real estate, things like that. That may be, again, what we'll see here. But from a real economic impact, I think what we are going to see is a bit of a deflationary unwind from this situation, where because of the lack of growth and the lack of capacity, that we will see deflation across the spectrum in terms of pricing. And one
Mhm.
of the areas that we're already seeing it right now is in the oil market. Anybody who's going to fill up their gas tank is definitely seeing very low gas prices. That's an offshoot. I mean, there are other factors that are involved, but that's an offshoot of this. So I think the first issue coming out of this is probably more deflation than anything else, I think.
So on the second component of that, the fiscal response, we've seen from the Canadian context, the kind of Canada economic benefit plans, benefit relief plan. I can't remember the name of it, but certain policies that are putting cash into, like you said, Main Street, regular people's hand. What From that long-term point of view, how does that impact us over 6, 12 months? Say that we're in this for a few more months, at least in kind of basically a stop in the economy. How does that work out with the balance sheet on a long term basis?
Well, I think the thing is the government is going to, we have the fiscal capacity in Canada to be able to do that. Fortunately, at least the federal government has been pretty good at maintaining its budget balances and the amount of debt that we had. I mean, we're certainly not as deep in the hawk as some parts of Europe to have to do this. But at the same time, you can only stimulate or put so much money into so many people's pockets. And speaking as reflecting a landlord, people will have to make their rents. And if they're relying simply on the government to pay those rent checks, over time there's going to be a bill that's going to accrue for them, for the government, and somebody's going to have to pay that back at some point. These impacts happen in the short term, and I think they're needed to happen. But over the longer term, call it 18 months out, how do we answer for all of that after? Presumably, hopefully, people find jobs again. The economy reopens. From the government standpoint, we're going to be left with the scourge of very big debts and deficits that will require changes in taxation policy and things like that. So these are long-term impacts that need to be unwound, and it'll be interesting to see where we go from there.
Yeah, one thing I was reading yesterday, I think it was a Guardian link, and it was showing state by state in the United States the amount of cases, and it was interesting. I knew that there was a delta between a lot of these states. I didn't realize how large it was for some states, with a few
Yeah,
thousand cases versus 200,000 plus cases in New
yeah,
York. So from our Canadian perspective, we keep hearing V shape, U shape, L shape. If there is a couple months where we get back to some sense of normalcy, will we see as quick of a economic uptick as we saw coming down? I mean, obviously not as quick because we basically shut everything down. But I would
hmm
imagine as we
yeah.
recover out of this, you have large amounts of sectors going back to some sort of work.
Yeah, yeah. I think in the early days, not the early days, but maybe 3 weeks ago, when people were looking at this, they were thinking more of a V-shaped recovery. That in the second quarter we'd see a deep downturn, but by the third and fourth quarter we'd see a pretty big pickup as everything starts to come back online again. The reality I think that we're starting to see, and we're hearing it from the governments themselves, even in the United States, when they're looking about how to turn back the economy. This is going to be a turn back in stages. It won't be a full switch back on. And I think when you start thinking of it from those terms, that social distancing, okay, we'll let up from getting out of our houses, but as far as congregating together, as far as going into shopping malls and retail and sporting events and travel, that's going to be in baby steps. And so if we start thinking about it from those terms, the recovery doesn't become as much of a V-shaped recovery in the third and fourth quarter. It becomes a little bit more of a U-shaped. If we extend this out and we start thinking about the fact that there are going to be people that are still going to be contracting the virus, and while we may flatten the curve, the fear of second round impacts continues to be there. You may not have as strong a rebound coming out of this as we thought. The second factor is that if that's the case, behaviors will start to change. And I think, as an economist and looking at trends, how are those behaviors going to change over the long run? And what does that mean for the economy? This could be a little bit more ominous a situation where we get into a bit of more of an L shape, where we come out of the downturn, but the recovery is a lot more stagnating and slower to come about. That I think those are the concerns, and I wouldn't be an economist if I didn't talk about the risks. On the other side of that, once the economy does get going again, and once we start coming back, I mean, at least, things will, the worst will be over. And I think the worst is probably right now, and will be over as we start to go through into the summer, into the fall. But the other things that I've been reading, and what everybody is saying, is that when we return to normal, it will be a new normal.
Mm.
It may not be like the normal that we had 3 or 4 weeks ago. It'll be a very different normal. So that's where we have to kind of put our headspace at.
Yeah, I think that's we're hearing that as well. Just it's it's not going to be exactly how we had it before when we do
Yeah.
get back to work. Lastly, I just wanted to talk a little bit about our space in commercial real estate, maybe even residential real estate to a certain extent. Prior to the coronavirus, we were in, we were guns blazing on our end. Cap rates were still compressing. We had, and I think still do have a lot of liquidity for real estate. We've kind of, at least from my clients, we've kind of froze right now, just trying to see what happens over the next few months. What have you been seeing, and what are your thoughts on the commercial real estate market? In the event that all the experts are correct, in that it's a few months that we're in this situation, not years, God forbid.
Yeah, it's a great question. I think the immediate impacts are pretty evident right away in some sectors like retail, the front end of hospitality, retail. And when I say retail, I mean non-essential retail. So the essential retail, grocery stores, liquor stores, they're doing just fine, and they're reporting really good sales. But in closed retail, some of the shopping malls, obviously this has had a very negative impact, not just on the property owners, but obviously the tenants themselves. All of them have already been dealing with long wave trends like online shopping, which has cut into their profit margins and their ability to grow. And I feel, and we've heard this, that because people are going to be shopping more online, it's speeding up trends that were already there for the retail sector. So from the standpoint of being a property manager and landlord in the retail, obviously that's probably the hardest sector. Secondarily is hospitality as well. When you go down to some of the other asset classes like office, well, social distancing is happening right now. Many of our tenants that we look at, whether they're in financial services or technology, many of them have the capacity to ride this out. They're putting their people to work at home, and they're getting by, and they're still paying their leases. One of the things, it's going to be, as you go through the different sectors, there are going to be some sectors that may not be able to pay their leases, over the long term. But I think what the real impact on office is going to be is behavioral changes. The fact that, okay, this is a real live laboratory where we can test what it's like to work from home, and whether we need to pay for all of that office space in prime places downtown, or we can get by with having a little bit of space here or there and having our workers work from home. Those long-term behavioral changes are going to have an impact on that asset class, I think. And certainly it may be different than what we saw in pre-virus about what requirements our users need. One of the other direct impacts is co-working. The whole premise of co-working kind of fell apart, because of social distancing, but secondly, the way the model has been structured, certainly by different groups, a downturn doesn't necessarily mean you're going to collect rent from these guys at a certain level, because nobody's leasing from them. So I think there's some changes on that side. Probably residential retail, we've heard a lot about it. The rent checks, from what I've heard, 70% in Canada at least have been paid for April. The question is how much longer, and we were talking a little bit earlier about a lot of people who do rent tend to work in the services professions. They've lost their jobs. We know debt levels have been high in Canada. They probably don't have a lot of savings. So the question is going to be, they going to be able to make those May, June rent payments? And I think from that perspective, it's going to be on a case-by-case basis with landlords to work out situations, because you certainly don't want to lose your tenants. And certainly, nobody's evicting anybody. There's policies in place right now to prevent that. But I think, dealing with that over a long-term basis is going to be a challenge. But certainly, one where the landlord and tenant are going to have to get much closer and have discussions on that. The last sector, and mind you, I think they're going to benefit to some extent from this situation, is industrial. We're seeing supply chains shortened. We have to get goods to people. Grocery stores need it, but online shopping needs it. And industrial is playing that role. So while I don't say that they come out completely unscathed, because there are going to be challenges with having logistics workers working together at the same time and all of that, long term, again, this is the part of the economy that needs to continue to function, to bring goods to people, and that's supportive from our perspective. And industrial has been the one sector that's been on fire. One thing I will say is that it's been interesting to see where record rents have gone in the industrial sector. Whether we can continue to see rental growth in that sector or any other sector right now is going to be questionable.
Yeah, it's interesting you talk about on the residential side. We have a couple properties we own, and we've luckily we had all our tenants pay the April rent. But I mean, April I don't think is indicative of really what's going on. But we did, like we were speaking
Correct.
before, the CERB, the Canadian Economic Relief Benefit. We just gave them the information of where they can go to get cash in their hands to pay. On the commercial side, I found that most major landlords, clients of ours, and being on the other side, on the tenant side, have been, unless you can show an actual impact to your business, they have held pretty tight in that the rent is still due. How long can that last if companies are impacted, I think remains to be seen. But just on the last point, you said something very similar to one of the economists we were listening to in NAOP that talked about technological disruption predating coronavirus. So whether that's working
Hmm.
leaner, working from home, just thinking that this would speed that process up, because it is, like you said, it's a test case for companies to say, oh, maybe we thought this thing could be done at the office. Apparently, it can be done working from home. So we're seeing that definitely, on the ground level.
Absolutely. I mean, yeah, it's amazing that something like this can actually speed up some of the changes that we're seeing on the ground level. One of the things I heard, which is interesting, was when Wuhan in China was starting to get things back in order. What they did do, especially in some of the factories, is employ a lot more robots and things like that. So you're seeing these um, changes happen, and now they're starting to be pushed to happen even faster because of an event like a virus. So it's amazing to watch. Tough to deal with transitions and adjustments, but it's happening. And so I think as real estate investors and operators, we have to be mindful of those changes happening so quickly, because real estate's a long-term investment, but these changes make big difference to our
Yeah, for
portfolios
sure.
over the long term.
For sure. Well, Carl, listen, thank you so much for having a chat. It was good to get kind of a Canadian perspective and a little bit of an economic update. So appreciate you taking the time today.